Hey guys, good morning, everybody. Today is Monday, August 5th. It is 6:24 right now. Market's going to open in about 6 minutes. So I'm going to go ahead and set up this room real quick, and we'll get started shortly with our analysis for today. It's got a few things here to update, and we should be good to go. All right, here. Looks good. So let me get this link sent out to you guys here in the premium. All right. So, all right, guys, people join in. I'm going to go ahead and start marking up liquidity over here. Something's going on in the market. I don't know what's going on, but something's going on in the market that is causing some crazy volatility this morning. You guys can see it's pre-market. ATR is already at 43. Some huge candles over here. I haven't really looked at the market, so I don't know what's going on, but try to get to the bottom of this. So let's go over here to the daily. I'm going to mark up liquidity over here. You guys can see the candles right here are huge. Again, I don't know what's going on, so I'll try to figure it out. But I'm probably going to hold off on entries until I understand, what's going on behind the scenes. Because I don't remember there being any news pre-market. I think a lot of this stuff happened overnight. All right, going back down to the 1 minute over here. Man, there's a ton of liquidity all over the place. All right, guys. So I've marked up liquidity over here. As you guys can see, there's liquidity above and liquidity below. All right. So with that said, we have the closest level of liquidity above at 38,908 and the closest level of liquidity down below at 38,569. We're currently in a bearish trend right now, or not really. We're kind of in a mixed trend right now because the pivots are crossing over. The trend meter is green and blue, and the divergence here doesn't really have a direction. But measuring each candle here, The volatility is pretty heavy right now. It's pretty crazy at the moment. So we'll see what happens here on open. I'm probably going to hold off a little bit before I start taking any entries. Um, yeah, it's just the volatility is way too high right now. If I have to make adjustments, I'll make adjustments. But as of now, I'm just going to see how the market reacts here on open. Hey, David, morning. Morning, Barack. Morning, Max. Morning, Daniel. Morning, Sadie. Morning, Maria. Morning, Steven. Morning, everybody. Yeah, so Maria mentioned that Japan's down 12%. I saw that overnight as well. There's something that's happened behind the scenes because if you guys look over here from the news calendar, there's news at 6:45 and 7, but there's nothing that happened pre-market. A lot of this stuff just happened, you know, I wouldn't say it as random, but there's other stuff happening behind the scenes that's causing the market to move this way. The ATR is currently at 50 right now, guys. Pre-market 50 ATR. Haven't seen the ATR like this since like COVID. I don't really. I mean, we'll see what happens here. These candles are way too big, though. There's no way we're going to be able to use a 15-15 TP stop loss today, guys, or right now at least. I don't even know if we'll be able to use a 30-30. These candles are like 60 points. Like these are just, I don't know. We'll see. Market is now open, guys. This is the opening candle. You guys definitely want to be careful today because looking at how price is moving here pre-market, it looks a little bit choppy. And then also on top of that, the volatility is extremely high. So yeah, I just want to be a little careful with this here. All right, so market is now open. We have news over here at 6:45 and news at 7. I mean, we're still in summer. This is August 5th today, so it's very unusual to see. Well, to see this stuff happen pre-market is even more unusual. Looks like these candles here are starting to kind of die down a little bit. So I'm gonna look for some direction here. Here's the thing that threw me off because I turned on the levels indicator this morning and look at all the levels here. This is how I knew price was super, like it was moving way too fast because usually these levels are pretty spread out, right? Yeah, they're not spread out here. These levels are, these are 50-point levels. So you guys can see the range is about like 200 points, maybe even 400. This range right here is like 1 to about 300 points. So again, guys, we'll continue to look to see what's happening here. And then once we have an idea of like what's going on, if the volatility has stayed up or if it's died down a bit, we'll start looking for some entries. But as of now, I mean, there's not even any direction here. As you guys can see, price is pretty much ranging and consolidating between these two levels right here. So the consolidation range right now is currently between, it's between the 800 mark and the 700 mark. So this is the range right here. It's a 100-point range. No direction. I'll wait for some direction here to be established, and then I'll start looking for some possible entries. Sadie said, I thought by skipping NFP, I will come back to a bit stable market. Looks like you guessed wrong, Sadie. I would have thought the same thing. I wasn't expecting this to be the case, the Monday following NFP, but it's all good. I mean, this is the market, guys. Like, this is why you can't really plan ahead. That's why a lot of people, they always ask me like, hey, Sean, do you like do all this analysis and planning like the night before? I'm like, I do zero analysis. I literally jump out of bed and I come to my office and I just trade with you guys. I don't even do any analysis before I get on this live session. Because it's kind of pointless, right? Imagine you're up all last night analyzing the market, like, oh yeah, the market's going to be bearish today. You wake up in the morning, you're like, what the fuck happened? The market's not anything which you thought it would be. The market's always changing, guys. So the real skill of trading isn't necessarily preparing. The skill of trading is really being able to react to the market. If the market's telling you something, you have to be able to react to it. You have to be quick. You have to be accurate. You have to be efficient. You can't just like expect the market to do something that you planned for last night because you can wake up in the morning and the market could be doing something completely different. And it'll be shot to your confidence. So yeah, like I said, I don't ever do any pre-market analysis. I don't do any analysis at all, really. I just analyze when I'm taking my trades. So like, for example, here, I could have easily not analyzed anything. And I'm like, I can just tell you that price is ranging between the 800 mark and the 700 mark. Yeah. Man, I'd be so upset if I spent the whole weekend analyzing the market to see what was going to happen right now and this happened because there's no way I could predict this was going to happen. I did see market like I expected market to fall because of the Japan news, but not like in this case where it's kind of going back and forth. There's a market flow entry that just came up right here, guys. Not one that I'd personally take, but if you guys wanted to take it, I mean, obviously that was market flow right there. The volatility is still very high. I mean, it looks like a 15-15 can be used as long as you use it properly. So I'm not going to change any TP stop losses right now. Leave it as is. Let's see. Sadie is asking a question, Sean. How is liquidity below? What's level two data saying? The level two is pretty balanced right now. I don't see any crazy orders coming in. So a lot of this stuff isn't from the level two data. Or there might be like one big order being slipped in there. But the problem is there's so many orders being filled in that they're just kind of balancing out. So what I would see here is I would just see some consolidation, either consolidation or a range, because I don't see any big orders. I am looking at level two right now. There's no like double digits. All the orders are between like 12 and, or they're between 2 and 6. There's there's some like double digit orders that are coming in, but they're not out of the ordinary. Like you'll see like 110 contract, 111 contract. But until I see like 20 contracts, 30 contracts, 40 contracts, then okay, I'll start looking at like that direction. But it's I think the volatility here is gonna die down now, guys. It's gonna, or I could be wrong. The ATR actually went up. So pre-market was at 42, right before open it was at 52, and now it's at 62. Now it's going back down to 58. The level two is not really being of help right now, though. It's pretty much just balanced. Same numbers on both sides. They just keep fluctuating. So I think price is going to keep ranging back and forth. Yeah, no problem, Sadie. Kenneth said slippage is crazy right now. So maybe the 15 ATR would not be a good sign. Uh, Daniel said, crazy that it's going from level to level in one candle. Yeah, exactly. These levels are 50 points away. So that's how you know it's really moving very fast. Um, Again, I'm just going to sit tight. I'm going to sit tight, even if I have to wait until after 7 where the market technically dies down a little bit. I think I'll be more comfortable waiting for that versus trading in this type of market condition because each candle is moving about at least 50 points. So if you ever see price come up and touch each level, so for example, here you see this red candle, it touched this level and it touched this level, that's a 50-point move back and forth. Basically a 50, one candle is like at least 50 points, which is pretty nuts. Yeah, Rashida said spread is at 3, it's usually at 1. Yeah, the spread right now is pretty high. I'm looking at it, it's 2 and 3 right now, guys, because the volatility is so high. So the slippage, I wouldn't say the slippage is bad, Kenneth, it's the spread. Because I'm looking at the spread, there's usually like no spread. It's like one spread, 1 to 0 spread. Right now it's 2-3. So I don't think the 15-15 TP stop loss will work right now, guys. Unfortunately, it's because you would get caught in the there's a market flow entry coming in right here. I'm not going to take it. I'll just watch it. But there's hasn't filled yet. The spread's actually really high. So the fifth, it didn't fill. So there's no market flow right there. Yeah, no, I didn't even think to look at the spread, Kenneth. Thanks, Rashida, for mentioning that. I didn't bother to look at the spread because the spread's never this high. I don't think I've ever seen a spread this high before. It's up to 4. Did you guys see that? The spread went up to 4. That's crazy. I've never seen a spread this high for futures. Yeah, I'm gonna hold off for now, guys. Even if I don't have to trade today, I think I'm better off just sitting out the market. I'll look for entries for you guys, but I'm not gonna take anything on my accounts, at least not yet. This is extremely high. Like I keep looking down at the ATR. When I woke up this morning and I turned on my computer, I didn't think this was real. I had to refresh my trading view like 3 times because I've never seen the ATR this high, like pre-market. And even market open right here. The thing is, we didn't trade futures back in during COVID, but when we trade indices, this is like indices movement. This is a like COVID movement, guys. If you guys traded during COVID time, this is the type of movement that we had. We were actually using a 50-50 back then. I mean, we might have to use a 50-50 right now if this becomes a normal case. You guys can see 50-50 works okay, right? I don't remember the last time we used 50-50 as our TP stop loss. Or even during COVID, it was even worse. I think we used like a 51-50 because we were doing a 3-1 back then. This was like what the TP stop loss used to be back then because the volatility was so high. You guys see it's a huge difference. So, you compare a 50-50 compared to a 15-15, what we normally use. Damn, this is a crazy candle right here too. So this is in comparison to what we normally use, right? So this is what we used to use during COVID, and this is what we use now. Damn, look at this candle. How big is this? Let me check that real quick. Jeez. A 1 minute candle was 150 points. Can you guys believe that? That's crazy. Okay, I'm gonna hold off for sure today. I don't even know if I'll trade today. Um, this is probably a sign to be extra careful. A 1 minute candle, 150 points. That's crazy. This is like how much it would happen in a whole day during summer usually. 150 points in like what, 10 seconds? I wouldn't be surprised if it comes right back down. Yeah, today's not the day, guys. Today is definitely not the day to be playing in the market. If you know what you're doing and you're taking bigger, like a wider TP stop loss, then so be it. But yeah, today's not the day to dabble in the market. You could have passed the challenge right here with one candle. Like, because this candle is huge. You literally could have passed an eval tip like right now if you just took like this one. If you got lucky and you're like, oh, I see a buy coming, and then you took this shoot all the way up. Sadie said something bad is coming. CJ said, what's going on? We've got 4-hour and daily candles on the 1 minute chart. Alicia said she switched to MYM to reduce her risk. $5 a tick is too much with those stops. Hey, Alicia, so I would be careful if you're trading on MYM on your PA accounts because it hasn't happened with me because I've never done it, but I've seen people who got rejected payouts because their contract size is varied like way too much. Like they were using like one contract on like YM, and then they would move to like 100 contracts on MYM. I'm pretty sure you're not doing that, but just a heads up, because I've seen people get denied payouts because their contract sizes, they're like so different. So just want to make you aware before you take any hugely different contract sizes. I know it's dumb because it shouldn't be that way because MYM is basically a tenth of YM. So okay, then you're fine. Yeah. Yeah, if that's the case, Lisa, you're fine. As long as you keep the contract sizes around the same. It's just like, like 10 contracts on YM is equivalent to like 100 contracts on MYM. So if someone was to go like below 10 contracts and then they did 100 contracts on MYM, it would set some flags, some red flags. Yeah, so here goes a retracement all the way down, guys. We had a huge 150 point candle here and then price retraced all the way back down right here. The crazy thing is that I'm looking over here at the level 2, guys, and there's no big orders coming in. So it's like throwing me off because it seems like a lot of this stuff is happening behind the scenes. Like these are like orders that are happening off chart. Like this isn't happening within the futures market. This stuff is happening somewhere else. So this movement here isn't necessarily happening in the futures market. Like, so this isn't happening on YM. This stuff is happening through other things. It's either happening through the companies. Let me check CNBC real quick. Oh my God, look at the Dow. That's fucking crazy. Look at this. It's down 1,000 points pre-market and NASDAQ crater 6%. Give me 1 second. Let me check I have a lot of fuck me. My long-term investments are in NASDAQ. I should have checked CNBC the first thing this morning. I didn't even check it. But yeah, something's definitely happening. What the fuck? Charles Schwab won't let me log in. There's definitely something happening, guys. This login service is temporarily unavailable. We're working to resolve this problem. What the fuck? Okay, something is definitely happening. I can't log into my Charles Schwab, which is TD Ameritrade, which is like one of the biggest companies that okay, well I hope all my let me check NASDAQ real quick. Now I'm kind of curious. So it dropped a little bit, but now it's correcting back up. Okay, so I'm okay with NASDAQ. I just thought it dropped a lot more. Okay, it did drop actually a lot since July, but I bought in like at a dip. But for today, it's not as bad as I would have thought. I'm just kind of I don't know. There's a lot of stuff going on. I'm just confused why I can't log into my and there's news right here at 6:45, guys. I'm just gonna watch today. I'm not gonna take any trades. This market is a little too crazy for me. The spread, damn, look at the spread, guys. The spread's at 8 points. Did you guys see that? 7, 8 points right now. Spread for OIM. So Dow drops 1,000 points, Nasdaq craters 6%, and global market rut. Uh, there's definitely some stuff happening behind the scenes, like because it's not showing up on the level two. So the level two is not showing any orders. It says what top investors are saying about the market sell-off. Don't panic, no crisis yet. I mean, it's hard not to panic when you see these crazy movements here. Yeah, the spread is nuts, guys. Yeah, Usman, you saw that? Spread hit 7. And the crazy thing is that there's no direction, there's no sell-off. So you guys see how price is moving here? It looks like they're shaking everybody out of the market. So whoever's trading right now, they're getting shaked out. It doesn't matter if you're trading for buys, if you're trading for sells. You're just all the retail traders are getting shaked out right now. Let me check the retail sentiment. Retail sentiment is currently at 60/40. S&P Global Services. The news here is irrelevant. It doesn't matter if it's like positive or negative. There's bigger things happening right now that's causing the movement here. I'm gonna try to log into my Charles Schwab from my computer. All right, I'm just gonna try to check on my long-term investments. That's crazy. We can't even log on to we are unable to authorize your access. Try again later. That's crazy. So, I mean, this is a big problem because if people are trying to get into their accounts to like sell off their positions, I think that's what they're trying to do. They're trying to prevent people from freaking out and selling off all their positions right now. But a lot of you guys are familiar with Charles Schwab, TD Ameritrade. Those are the big names in like uh, self-directed trading and long-term investment trading accounts. I can't log into any of them. So I think right now they're just trying to prevent people from hot logging on and selling off all of their investments. Dang, I just saw some big orders here. Price might come back down. I just saw a big 68 contract for a sell on level two right now. Everything else is at like, so it came down a little bit. I don't know if it's going to keep dropping, but There's a big order again, 67 contracts on level 2. It's sitting up here though, so it's at like 70. So I'm seeing a bunch of sell contracts being set right here. Unless they're trying to counter it. But I don't think that's enough to make it drop down. Let's see. Sadie said, time to buy stocks soon when everyone panics, right? Just like Amazon's so cheap at the moment. Yeah, no, for sure. When people are panicking, that's the best time to buy stocks. You just got to buy and hold on to them. I wasn't really planning on selling off on my long-term investments anyways. I was just going to check on them to see how they're doing right now. I checked on them last night. They were actually okay, but I'm assuming after this big drop today, it kind of came down a little bit. So I have a lot of investments in like QQQ. QQQ measures, so QQQ measures NASDAQ. So if you want to trade NASDAQ NQ and you just want to do long-term investments, you could do QQQ. If you want to do S&P, you can do the spider. So usually what I do here with QQQ is I buy the dip. So I look for like these areas where like the lower lows. And then I just buy the dip. So whenever price dips down, I'll buy at the lower low. Price dips down to this lower low, I'll buy some more. I'll buy like 10,000 shares. And I just hold on to it because I do expect this to be bullish long term. So whenever it dips any further, like for example here, this is how I made a lot of money off QQQ over the past couple of years, is whenever it dropped down to a lower low, I just bought some more. Drop down to this lower low right here, bought some more. Lower low, bought some. And then it shoots up. And I make a bunch of money on that. So that's how like my long-term investments work. There's specific assets that will mirror, these other things that you guys want to trade. But the main two ones are Spider and QQQ. There's also Vanguard, but it depends on what you're looking for. Sadie said, but lower low shifts. They don't shift once they're established, Sadie. That's why they're here. Like these haven't shifted, right? When there's a new high, the lower low doesn't shift. That's why you have to wait for it to establish. So you see how these never shift? Because there's a new high, there's a lower low. Once there's a high, it doesn't shift anymore. So it just stays there. So like you just wait for it to come back down. Comes back up, comes back down, comes back down right here, comes back up. Once the new high has been established, this lower low doesn't shift. It stays where it's at. And that's where I buy. Because that's typically where the lower lows of that point are, like within that time period. Yeah. You don't buy when the lower low is established. I mean, you don't buy when the lower low shows up. You buy once it's established because you want it to push up and you want it to retrace down. That's how you buy the dip. That's what's called buying the dip. You're not buying the dip when the dip's being created. You're buying the dip when it comes back to retest the dip. Yeah, exactly. That's what I do. Same with this here. I mean, if you want to do it on YM, it's the same thing, right? You have a lower low here. Once it's established, you can buy the dip. Price comes down, you buy the dip right here, eat a bit of some red, and then it shoots back up. Again, price comes back down right here, you buy the dip, and then it shoots right back up. Yeah, that's the whole concept behind buying the dip. You're not buying the dip as it's dipping. You're buying the dip when it retests the dip. So we have liquidity right here that just got hit, guys. Obviously I'm not trading around this area, but I was a liquidity right there that blasted right through. The ATR just keeps getting higher. I'm like still pretty shocked that the ATR is not dropping at all right now. I don't think I've seen this ATR like this in I don't even know how long. But yeah, if you guys want to trade in this market, you would have to probably use a pretty big TP stop loss. I wouldn't use a 15-15. I think a 50-50 would suffice. I mean, it might be even a little too wide. You might even want to use a 30-30. The thing is that you want to cover the spread too. So I think a 30-30 can work in this type of market. So here's a 30-30 right here. $653 right now. Yeah, so you want to use a wide enough TP stop loss to cover the spread and then also to cover the movement. So if you guys are trading right now, you probably want to use between a 30-30 or a 50-50. So if you use a 30-30 right here for the liquidity, it pushed up to its TP. Yeah, it's tricky. All right, Sadie, I'll see you back here tomorrow. Yeah, it's probably the best I mean, for me, I'm just gonna watch from a distance. I'm gonna analyze and see how the market's moving. The thing with the market right now is that it's not even really moving directional. So until it moves directional, I wouldn't even want to touch the market. Um, there's a market flow entry right here that just came up. This is for a 30-30 TP stop loss. Currently running right now. I'll just follow it, not in the position. So once I feel confident about trading in this market, then I'll start taking some trades. But as of now, it doesn't look very great. It's pretty choppy. So I'm gonna clean up this liquidity right there. And at this point, the 50 point levels are probably not going to be too useful. We might have to use 100-point levels. There we go. It kind of spreads it out a little bit. So I just changed the levels from 50 to 100, guys. So instead of having the 50-point levels, I changed it to 100-point levels. Actually, I already had it here. I'm move it back. Sorry. I forgot that I had a second one on here for days like this. Max said 1 winner, 2 losers. All good requesting on 5 of his PAs today. Nice work, Max. So Max made some pretty good profit today, and he's going to be able to request his withdrawals, his payouts. So nice work, Max. There's a breakout V3 continuation that happened right here. Actually, a normal breakout that happened right here. Breakout V3. Kind of at 648. I don't know if anybody caught that. Barack said, do you think it has something to do with the Fed briefing on Friday? Um, there was a Fed briefing on Friday, Barack? I know there was one on Wednesday last week. I don't think there was one on Friday. But no, I don't think it had anything to do with that. This is from the other stuff. It's from the Japan news and stuff like that. But I don't think there was a Fed briefing on Friday, or at least not one that I knew about. I knew there was one on Wednesday. That's when the Fed news was released with the interest rates. But I don't think that has anything to do with this stuff that's happened today. The Fed news is basically on the interest rates. The interest rates is not going to affect the market because they're not changing interest rates. They're not changing them until like September. So like another month out, September, October, November, around that time, they're going to change interest rates by a little bit, but not enough to throw the market into a frenzy like this. A lot of this stuff happened from the news over the weekend. Well, that's the only thing I can think of. The Japan news when they dropped, I think, 12%. So let's refresh this real quick. Yeah, this is crazy. The Dow is down 1,000 points today. It hasn't been down this much since COVID. Like, we can always relate back to COVID because that was like probably the craziest time that we've ever traded during our lifetime. And with this is like it was happening every day. So every day it was down like 500 points, 1,000 points, and then right after that it corrected right back up and it shot right through. The Nasdaq is down quite a bit too, but not as much. So it's down about 600 points. This is where a lot of people get scared. During times like this is probably the best time for people to actually buy. It's risky, but if you have like disposable currency to take something like that, then that would be the case. Here, let me brush this real quick. So there's no updated news here. This news is just the same stuff that we looked at earlier. This is from this morning. So this is from this morning at the CBOT. So basically at the CBOT CME, this is where we trade the futures in Chicago, Illinois. The trader monitors offers in the S&P options pit because you can see how the fear is like kind of going crazy right now. The CBOE. Yeah, there's no update here. I'll keep looking here to see if there's any updates, but for the most part, so it says right here the cause of the drop. It says US stocks fell sharply on Monday as part of a global market sell-off centered around US recession fears. Japan's Nikkei 225 plunged 12% in its worst day since the 1987 Black Monday crash for Wall Street. The Dow has dropped 1,000 points or 2.6%, and the Nasdaq has dropped 4%, while the S&P dropped 3.2%. So yeah, fears of US recession were the main culprit for the global market meltdown after Friday's disappointing. So this is a jobs report for NFP. I don't know if there was a Fed meeting, but I know there was NFP obviously on Friday. Investors are also concerned that the Federal Reserve is behind in cutting interest rates. So that's what you were referring to, Brock, the cutting of interest rates. They're not doing it until like September, October, November. So yeah, I don't think it had look at this huge spike right here, guys. So we have news right here at 7, and this thing just spiked up how many points? So that was ISM services, some more inflation news right there. Huge candle. So this candle spiked up. This is not normal. We don't see this type of movement during ISM ever. So this candle spiked up, let's see, almost 300 points in 1 minute or like a couple seconds. This is crazy. Yeah, this is crazy. The ATR is at 84. You guys believe that? That is crazy. The ATR is above 80 on a regular Monday. Our normal ATR is like at 15. Our normal ATR is like 15, 20. And we're in the middle of summer too. It's August 5th. Yeah, I don't know. I don't know what to say, guys. Honestly, I have nothing to say to this type of market. I'm kind of glad that we're sitting out because I mean, you could easily get caught on the wrong side. And because of the wide spread, right? So price is pushing up to the liquidity up here. And honestly, I'm kind of mind blown to see how far this is pushed. So let me go over here and I'm going to measure this real quick. So this thing has pushed up almost 600 points. Let's see, Drew just sent this update over here from Apex. Let's see what it says. Yeah, so it says as market seems to be picking up momentum, now is a good time to remind traders of the price fluctuation limits determined by the CME group in coordination with the underlying equities indices. Full details can be found below. Brief description, different types of limits put in place. Yeah. So the first for the futures market, most markets on the CME has imposed overnight price movement boundaries. Yeah, there's just they're like they're just limit up and limit downs. Like price can't go up a certain price point or go down a certain point. They might implement I forgot the name for it. There's a specific name for it where they kind of just freeze the market because it's going up or going down too much. Yeah, circuit breakers. There we go. That's what it is. So multiple tiers of circuit breakers. So the thing is, guys, Apex, before you guys blame Apex on this, this is not Apex, right? This is all based off the CME group. Like, I could already see there's going to be a bunch of people complaining to Apex about slippage, about spread. Apex has no control over the spread or the slippage, guys. There's these things called circuit breakers. If price pushes up too high, the market just freezes, and it's not based off Apex. So I know we're going to have a whole bunch of people crying about this tomorrow and later today. and blaming Apex for stuff. And I'm glad that Apex sent this warning out because you got a lot of dumb people here who like, not here, but you got a lot of dumb people who are trading with Apex and they just want to blame Apex for everything that happens. Circuit breakers, I haven't seen circuit breakers been implemented since COVID. So COVID was the last time circuit breakers were implemented. If you guys remember trading with us back then, it was pretty crazy because price kept climbing and then the market just stopped for like 5 minutes. And then as soon as the 5 minutes ended, the market started dropping super heavy because everyone was selling out. And then the market stopped again for 5 minutes and then it shot all the way back up. So there's these things called circuit breakers. If you guys have never heard of them, we've only seen them happen once in, well, in my time, I've only seen them happen during one period. It was during like the first couple of days of COVID, once we went into full lockdown. I think March 20th of, I think 2020, around that time, between like March 18th and March 20th, we had these circuit breakers, and Apex is warning everybody that this is what's going to happen today, right? So just be careful. I mean, I wouldn't even bother trading today, guys. If you guys want to trade today, feel free, but I'm not going to take that risk because the last thing you want to do is get into a position. Like say, for example, you take a market flow entry right here, right? Say, for example, you take a market flow entry right here, and then the circuit breakers get set off, right? You're in your position, price pushes up a little bit, and the market just freezes. And you're like, fuck, I can't get out of my position. At this point, when the market opens up, it's probably going to spike down because everyone's going to be scared and they want to sell off, and you're going to hit your stop loss. So I would just be careful with any entries right now. I'm not even bothered taking anything at all. There's just no point. It's the same thing that happened with like GameStop, right? When GameStop was going crazy, they set off the market, the circuit breakers because they don't want the market to come crashing down. So for example, if everybody sells off at one time, the market is going to just explode, right? And they don't want that to happen. So that's why they set the circuit breakers up. Like, so let's see. I don't know how far price is pushed up so far, but the percentages over here. So 7%, if market moves 7% from, I mean, wherever it's currently at, then they will set circuit breaker. So let's go from this lower level right here, lower low. It's not close to it yet. So just don't be too worried, guys. Right now, it's currently at like 1% or 2%. So we're not there yet, but if it does continue to climb up, like it, this candle here pushed up about 300 points. If it pushes up like 7%, then okay, the circuit breakers can get set off. But I think right now they're going to just balance out the market. I mean, ideally, that's kind of what's going to happen. That seems like what's going to happen here. But the thing that you guys want to be prepared for is the next following days. I'm actually hoping that price continues to drop lower. I want this to keep dumping lower and lower and lower. Because if you guys remember during COVID, when that happened and price dumped lower and lower and lower, when price started climbing up, it was so easy to make money, right? You could just take a buy anywhere. You could take a buy with like, I don't want to say to use no stop loss, but you can basically use no stop loss and eventually your TP is going to get hit because the price is just going to keep climbing up. That's kind of what we did during COVID. I think those are the days where I made the most profit in single days because I would just use a really, really wide stop loss and then my TP would eventually get hit. Not like all day, but we used to take the daily entries. If you guys remember the daily entries back then, we took a 150 point move. Basically what we did during COVID is we waited for these buy signals to come up. So for example, market open, we saw a buy signal come up like right here. And then we would just hold on to it. Sometimes it'd be 150 points, sometimes it'd be more, 200 points, even 300 points in some instances. Like you could literally just wait for the buy signal when market opened, and then you just hold on to it. The trade would take all day, but eventually it would hit. So that's kind of what I'm sort of banking for if price does come down lower. Doesn't look like it's going to be the case here. If we go on the daily chart, yeah, price, I mean, it might climb down lower as we get later and later into the session. But so what I would look for here is look for these low points to get hit. And then tomorrow, look for the correction back up. So I'd like the price to come down further and then make a climb all the way back up. for the rest of the year. That's literally what happened during COVID. We had like March was super bearish, and then from April up until the end of the year, it was just straight bias, and it worked out. Let's see. CJ said they shut the market down like that in the documentary too. Yeah, exactly, CJ. I think so. Before then, that wasn't the last time it happened. So like in the 2000s, we had like the flash market crash, and they implemented circuit breakers. But you guys are good for right now. If you guys want to trade right now, you're not going to see the circuit breakers get set off just yet. I probably would keep an eye out on CNBC because they'll give a heads up. So currently right now it's down 2.3%. It's a long way to go. NASDAQ is a little closer though. So NASDAQ is at 4% down. So if these reach 7%, then the circuit breakers will get shut down or they'll get implemented. But YM right now, I think it's fine. All right, so the ATR is starting to calm down a little bit. This is a good, I wouldn't say it's a good sign, but it's a better sign. I take that back. As soon as I said it's starting to slow down a little bit, it went right back up. Earlier, it was like at 84 though. So it went from 84 to like 60, now back to 71. About 60 points. All right, so let's see. What are we looking at here? Market opened up at 6:30. I'm gonna mark at 6:30 time. So from market open right here, up until where price is currently at, let's just measure real quick. Market open right here. So you guys can see the big spikes in price, but realistically, price where it's currently at right now, it's back down to like 131. So it looks like the market is starting to stabilize here a little bit. We had these huge spikes here initially on open. So market open right here at 6:30, spike down, spike right back up, and then now it's coming back down. A lot of the craziness happened here pre-market. So pre-market's where a lot of the heavy movement happened. And then we just have some volatile candles here. The spread is still pretty wide right now. So the spread's currently shifting between 3 and 4. On open, it got up to like 8 points. But you can see here that the spread is starting to kind of calm down a little bit. I think that's something that you probably want to keep an eye out for. There's another market flow entry right here, currently running. I'd probably use like a 30-30 on this one, full TP on that one right there. So I'll keep looking for entries, but like I said, I'm not going to take anything right now or probably not even today. CJ said, I'm chilling with my popcorn watching the market because this is a whole movie. You know, there's probably going to be a documentary based on like what happened today. Because this is like one of the markets, well, not today, but like we'll see what happens over the next couple of weeks. So if this continues to happen for the next couple of days, this week is going to be done some sort of event, right? Maybe not as big as like the, like Black Friday or the market crash or the flash market crash, but it'll be done with something. I'm hoping this doesn't last though. I'm hoping this is just a one-day thing. People are going to chill out tomorrow and market will go back to normal. But you got to be prepared. So we'll see. David said, I will follow your advice. No trading today. Just saw several trading platforms are down. Yeah. So David over here just mentioned that like 7 trading platforms are currently down right now, including my investment platform, Charles Schwab, which is one of the biggest. Like Schwab bought out TD Ameritrade. That's why the name changed. Yeah, they're one of the biggest trading brokers out there, or just trading platforms in general. And I can't even log into it right now. Let me see if I can log in now. They're probably gonna send an email later explaining why we couldn't log in, but we already know why. They don't want people to sell off. Yep, login is unavailable. All right, so we'll keep looking at the market here. It looks like it's starting to slow down a little bit, not in a good way though. It's just starting to consolidate here. So I'll put the 50 points back on. Price is starting to consolidate right here between these two price levels, between the 950 and the 900 right here. We're seeing some consolidation here sideways. Any updates over here? I think so. Here's, and I'm just reading this right here too. It says Wharton's Jeremy Siegel says Fed needs to make an emergency rate cut. So I think the Fed is going to be forced to make a rate cut probably this month or next month. I think that's going to be the case. So with the market kind of fluctuating like this, I think it's going to pressure the Fed to implement a rate cut earlier. I know they were thinking about doing it in September or October or November. I think they're going to have to do it even sooner. And this market is just forcing them to, it's basically going to force their hand. Because I wasn't expecting this to happen. And I'm sure they weren't expecting this to happen. And now that they see this craziness happening in the market, they're probably going to lower rates, which was going to happen already, but it's just going to happen even earlier. So that's, I mean, it's a good sign for the majority of us. Now I'm kind of curious. I need to get out of my CDs at that point if they start to drop rate cuts. Just gonna check something real quick. I'll just check it on my phone because I have a lot of my a lot of my money that's just sitting in CDs right now, and I don't think it's gonna fluctuate very much. But my CDs don't have 2-month maturity. Let's see. Yeah, so my CD matures on September 1st. Just gotta make sure to pull my money out and then just hold cash for now. So yeah, a lot of you guys have been following the interest rate news. I mean, depending on what your investments are in, if the interest rates go down, of course, like these CDs or high yield savings account, the rates are going to go down too. You're not necessarily going to lose money, but you're not going to make as much money. So now I got to look for other alternative investments while we wait for this market to go through its changes. All right, so like I said earlier, guys, there's not much going on here. Price is just consolidating between the 950 and the 900 mark right here. Looks like the market's going back to normal. So starting to stabilize here a little bit. It's still moving pretty heavy. It's moving about 50 points per candle, but it's not moving 100 points per candle like earlier. So that's a good sign. You guys can see here, it's starting to just go sideways now. I'm looking at the level 2. Level 2 is still the same. There's no crazy orders coming in or out. It's kind of just staying where it's at right now. Let's see, Barack said, as for me, I just appreciate being in this group. When I was trading alone, I would look at the charts and still try to fight the wave. Wouldn't even check the news, but now he knows better. Yeah, 100%. I think so as well. Let's see, Modi said, I think we might be calling it quits for the Bears this week. Possibly. I mean, we'll see. If the interest rates get cut early, then yeah, I think price will continue to climb up higher. That's going to be good for the market. But yeah, it's kind of hard to tell, Modi, because of like what happened today. I wasn't expecting all this crazy movement to happen here pre-market. I mean, price pretty much dumped down between 4 o'clock and 5 o'clock. So basically 4 o'clock until pre-market open right here. This thing dumped down and it started moving pretty crazy. Ideally, yes. So ideally I agree with you, Modi. I think price will be bullish because it's down way too heavy right now, right? It's still down at about 1,000 points. So I think there's gonna be a recovery, but obviously something has to be done to um to fix that. So yeah, I'll probably have a bullish bias this week. Let's check the retail sentiment real quick. So looking at retail sentiment, I'm surprised people are still holding on to their positions. It's currently 42% long, 58% short. So this indicates that 42% of retail traders are currently buying right now, and 58% of retail traders are currently selling. This isn't all the retail traders in the market, but basically that's kind of where they're sitting right now for the most part. Um, yeah, there's still a lot of retail traders on the sell side. They're trying to catch that top, but I mean, realistically, it's probably going to shift. Ideally, I want them to stay on the sell side so that we can take the opposite direction, the buys. But I mean, we'll have to wait and see. So looking at this right now, the ATR is now dropping down. It's back down to 64 points. Earlier, now it's down to 60 points. All right, the volatility here is starting to drop down a little bit. There's a market flow entry here that just came up, guys. I still don't think I would use a 15-15 right now. I'd probably stick to that 30-30 at the moment. Yeah, the volatility is definitely slowed down a bit, but I mean, I still wouldn't take any trades around here. Looks like price is kind of just faking out a little bit over here. So we have, I mean, price is still stuck within the range here. So the range is still between 950 and 50 and 900 over here. Everything that pushes out of this area is probably going to be just a fake out. So this is the range right here. Price will fake out above, pull back into the range. Let's go to our clean chart that we haven't used in a long time. All right, so let's see. So you guys can see right here, I made it a little more clear where the range is happening. So the range again is just happening between the 950 and the 900 down here. It's just going back and forth. Every time price breaks out of it, it's just a fake out. So price will go sideways, pushes up right here, fakes out, pulls back into the range. If it pushes below, probably gonna fake out again, and then probably pull right back into the range. So a lot of back and forth movement right there. The ATR is currently at 64. So the ATR still hasn't stabilized yet. You can see right here, it's shifting between 60, 61, 63, 64. That seems like the average right now. It's between 60 and 64. I guess you probably want to wait for it to drop a little more. If that's the case, then you might even want to use a 50-50 as your TP stop loss if you decide to take any trades. Because you kind of want to keep it between the like close to the ATR at least. You can see again right here, price pushed up, faked out above up top, and it pulled right back into the range down here. All right. So I'll keep looking, but if you guys have any questions, feel free to put your questions in the chat. Otherwise, I'll keep looking for any possible opportunities here. As you guys can see, there's not really much going on. I'm gonna close out this PRB chart and this BV3 chart because we don't use them anymore. I'll just keep it as this. So we'll have our multiple charts right here. If we want to look at this from a bigger picture. So let's actually take a look at this from a bigger picture. So looking over here across all the time frames, the higher time frames here are obviously bearish. You can see the 4-hour, 1 hour, 30-minute. They're all super bearish right now. The 1 minute is a little mixed. The 5 minute here, it looks like everything is bearish. So I think price will continue dropping from where it's currently at. I think eventually by the end of the week, price will probably start to climb up again. I don't think it'll probably happen by today, but I think it'll happen eventually. Um, yeah, no, this thing's been bearish since August 1st. I didn't even really think about it until now. So looking over here at the 1 hour chart, price actually crossed below on August 1st over here on Thursday. So last Thursday, price crossed below and it's been dumping ever since. This is from the 1 hour chart. So it started dropping from right here. That was last Thursday. And it's been dropping ever since. So just looking over here on these time frames, looking at the 30-minute, I mean, this is basically a setup for a market flow, right? If this here ends up coming back down and closes red, then this will probably continue dropping. We'll come back to that later. So here's our main chart again right here. Price is now below the, let's go back to the clean chart. Price is below the range. I wouldn't be surprised if this here fakes out and then pulls right back into the range over here. And that's exactly what's happening. You guys see what's happening right here? You know, this isn't new. We've seen this happen time and time again. Price fakes out up here, pulls back into the range. Price pulls down here, fakes out right back into the range. So no surprise there. It did exactly what I said would happen, right? So I said, if you guys want to trade, you want to be careful here because price is just ranging between this area. It'll fake out whenever it pulls out of it, and then it goes right back in. If you guys want to take a trade here, I think this could have been a CV entry. Let me check on the regular chart. Yeah. So this right here is actually a CV entry. If you guys want to take B1 variations and CV entries, this is probably the best time to take them. You can see here price is going sideways, price pulled down. There was a low right here. This candle was a smaller than this candle, so this would have been a CV entry for a buy. So if you guys have been around for a while, you guys know my strategies. This is a CV entry right here. It's a classic CV entry. Again, I would probably take it for a bigger TP stop loss, like maybe a 50-50. You can see right there, full TP. Yeah, Kevin said back-to-back CVs. Same with this one over here. So there's a CV right here on top, right? There's a high with a smaller red candle. This was a CV entry right there. If you guys want to take these fake outs and pulls back into the range, you guys can do that. It's very easy. Right there. So again, right here, if you see price pushing back up, I CV entry back down. Let's see, Barack is asking, tricking sellers into positions, not necessarily sellers, but it's tricking retail traders into positions in both ways. That's why there's a CV above and there's a CV below right here, Barack. So I said it's tricking in both directions because realistically, price is going to keep getting pulled back into this range right here, right? So it tricks buyers right here because people think price is going to break out to the upside and you can take a sell the opposite way back down. Same with this right here, price breaks below and then it climbs right back up. So again, over here, price is below the support level. There's probably not going to be a CV here again, but the reason I know that's because there's no high here that's established yet. So there's probably not going to be another CV here. I mean, this might be the continuation to the downside, but I still wouldn't take anything right here. So in order for me to want to take something here, I would need price to actually break below this area right here. So I wouldn't really recommend taking any sells until price breaks below here. Because this can easily just fake out right here again and pull back into the range. So just look out for those traps. Again, right here, this could be a possible fake out. And then a pull right back into the range. So this might be another CV entry. No, I take that back. So it would have been a CV entry if this wasn't a new low, but if this was the low and this was the green candle, this could have been a possible CV, of course, which of course it's not. It's no longer a possible CV. All right, so price is coming back down right here. Let's see if it finally broke out of this area. Again, like I said, I wouldn't take any trade until it happens below this point, because at this point it breaks below this low, and possible continuation to the lower side. Okay, so this might be another CB right here, another reversal pattern. It's got a lot of time on it, about 50 seconds. The ATR is back to 60 ATR, so it's kind of pulling back to where it should be. No CB there because the lower low just got pushed down lower. So it looks like price pretty much came back to open. All right, so now that the market is looking like it's back to normal at this point, or sort of back to normal. I wouldn't say completely back to normal, but it's sort of back to normal right now because of the movement. Price is now below this point. So like I said, once price breaks below here, you can probably look for that retest and continuation down lower. So now that price is broken out of this range, at this point, you can possibly start looking for some sells here. Possibly a retest off the opening price. And continuation down lower. So looking over here at CNBC, this thing is dropping back down to negative 1,000. See if there's any updates here. All right, so we got a couple updates right here. It says Monday's losses push NASDAQ deeper into correction territory. That's a given because the NASDAQ was super bullish for the longest time. So there's no surprise there. It says Bitcoin and Ether trim losses at open. All right. Yeah, there's not really too much of an update here. So here we go. It's price retest the open like I marked up right here. It's doing exactly what I marked up. So now what you would look for, and there's a CB entry right there actually. So there's another CB entry right there as a lower low. I mean, you could have rolled this back to the open, basically. See, this is where the things kind of, this is what you want to look for, like the CB entry. So if you guys are looking for the reversals, look for a double body or look for a CB entry. This isn't a double body, but it is a CB entry. Same with this one right here. So you can see there was a high with a smaller red candle. This is a reversal pattern for a CB, came down. Same with this one over here. This is another reversal pattern for a CB to the upside. We had a low here with the red candle, smaller green candle, and this thing pretty much filled that red candle right there. Looks like price might be pushing back up to the, so the fake out actually happened right here. And it looks like price is trying to push back up to the range. Yeah, the break and retest of this level never happened. So if you guys remembered right here, I said to look for the break and retest. And then once you have that break and retest, you can look for entry. Break and retest never happened here. So that confirmation has never played out. This might climb right back up to the range now. And this is how you use multiple confluences and multiple analysis to see where price is going, right? You never want to be stuck in one direction. So for example, here, I never told you that, okay, price is only going to come down if it comes below this point. I said if the pattern plays out and it breaks and retests off this lower low or this lower point right here, then it would probably come through. But because that retest never played out, I mean, anything is up for game here, right? Price is currently in the middle right here. Again, this could be another retest of it and come down, or this could be another fake out and it can come right back up. So broke below, fake out, back up to the range. So whenever you guys analyze the chart, don't be stuck on like one bias. So it's good to have a bias, but also look at both sides. So you can say, okay, if price comes below this point, then okay, I'll look for some sells if this actually plays through. Or vice versa, if this doesn't happen and it fakes out, then look for it to come back up. Right. This way, you guys are never like you guys are never like, so what happens with a lot of people is once you have an analysis and your analysis isn't played through, your confidence just goes through the, like, it just goes down. Like you never, like you can never get anything right, right? That's why you should never be stuck in just one direction. Always have two analysis. Have one analysis for one direction. And you're like, okay, if this doesn't happen, then I'm going to look for this to happen, the fake out correction back up. So either way, you're going to be right. It's just which one is going to play through. And then once one of them plays through, then you can be more confident with taking trades in that direction. But again, it looks like price here just reversed. We had the CV pattern right here. That's a reversal pattern. Price reversed back to correction to the upside, and now it's going back into the range. So always have two analysis. And now two analysis for what you think may happen. And then if that doesn't work out, what's the following thing to happen? That way you can just flow with the market, right? You want to flow with the market. You want to be stuck in like, oh, I'm only going to take sells or I'm only going to take buys. You want to flow with the market. You know, you want to take sells, but if the sells don't work out, then when you're going to start taking some buys. Again, if you want to take some buys here, I'd probably look for price to break past this area up here. So now the analysis changes, right? Price faked out. Look for it to break above here and climb from there. And then if this doesn't work out, what do I see happening here? Price fails to break above it, comes back below this way. So you just have two analyses every time. Whenever you're looking at something, you have one initial analysis and then have one backup just in case that one doesn't work out. And wait for your analysis to play out before you start looking for entries. Unless you want to catch these reversals like this here. You know, like I said, if you guys just want to look for CV patterns, the CV patterns work well during a consolidating market. That's why it's called a consolidation variation, because it's meant for these types of markets. 7:35 right now, guys, getting closer and closer to 8 o'clock. The volatility here kind of slowed down a little bit, but it's still pretty high. 66 ATR. Go back over here to our main chart. All right, so we have a bullish momentum here. This is a possible breakout V3 continuation pattern. So we have a buy signal here, green candle. If this closes green, this could be a possible breakout V3 continuation pattern. So if you guys want to take that, you can do it for a 30-30. If you want to take it for a 50-50, you can do that as well. The only problem here for me is that the spread is still pretty high. So if you guys are looking at the spread up here, the spread is still 4 points. So it's going to be tough for you to like really catch any trades here, because when you go into a trade, you're going to be negative 4 points already. Just keep that in mind. I would factor in the highest spread. So say, for example, you enter a trade right here, right? Your entry is actually not going to happen. Like your entry is going to happen way up here. So don't get pissed off when you enter a trade and you're like, why is my entry so bad? It's because the spread's super wide. So for me personally, I don't like widespread at all. I think widespread is probably going to be like one of the biggest factors for me not to take a trade for the day, because when the spread's that wide, it can totally screw up your entire position. And if you guys don't know how that works, you know, like I said earlier, if you enter a position, so say, for example, you enter a sell position right here, right? So you're going for a 50-50, it's not going to be 50-50 because you're going to get in at a lower price. So instead of getting in at 50-50, you're going to get in like, your entry is actually going to happen down here. And then that's going to screw up your position, because now you're not at a 1-to-1 anymore. You're now like at a 2-to-3 or 2-to-1 basically. And it's going to screw up your risk to reward. So just keep that in mind, guys. You know, I'm going to try to inform you guys and give you guys as much of a heads up as possible. But when the spread's wide like this, it's probably best time to just not even trade, because you got to pay the spread to get in. You got to pay the spread to get out. So, I mean, realistically, if you're going in for a 50-50, so let me just show you guys again here. I mean, depending on your broker, usually you pay both ways, but your spread is going to be about double that. So 8 points. So basically, if you get in right here, if you want to get in at this price point, you're really going to get in up here. And that's how you get screwed, because your entry is going to happen right here, and then your TP is going to be even higher. So you might get past your TP right here, and you're not going to get closed out. And if you go to your stop loss down here, you actually get stopped out closer right there. You're not gonna get the full stop loss. So spread is it's not something to play around with unless you're going for a really big move. If you're going for like say 100 points or something like that, then okay, you're fine because you're going for so far out that your spread's not really going to matter. But if you go for anything like below 50 points, the spread is going to have a pretty bad effect on your trade. There's still no trend here that's been confirmed. Price still going sideways. Looks like we might have a new range down here. Yeah, so it looks like this might be the new range down here. So below between this high point and this lower point right here. This is now the new range. Let's see. Modi said bought the fake out on MNQ. Target hit done for the day. Nice work, Modi. Yeah, if you guys are able to make profit in this type of market, great. But for me personally, you guys know how I trade. I'm very conservative, so I don't like to take anything too risky, especially because now I have 20 PA accounts with Apex at 300K. Not trying to make any mistakes here. So I'm going to be as conservative as possible. The candles here don't look super big, but they are pretty decently big. Or these are starting to slow down a little bit. You're getting like a couple big candles, but for the most part, it's starting to slow down a little bit. All right, let's see this candle right here. See, like this candle is a little bigger. It's like 30, 40 points. But I for sure don't recommend using a 15-15 right now, guys. Spreads up to 5 points. So I'm just going to keep reading out what the highest spread is. I don't care about like what it goes down to, but what the highest one is. So the highest spread right now is about 5 points. That's a really big problem if you're taking a 15-15 because you're going to go in with a -5 already, and then you're basically going with like -10 at that point. So having a 5 point stop loss is way too tight unless price spikes in your direction. So we got price kind of just sitting right here at the opening price now. It's sitting at this blue line, which is the opening price, and the news price right below it. The ATR is dropping back down. It's currently at 59 now. The look back for my ATR is only 14 candles, so you can see the volatility still is like all over the place. Yeah, Modi said it was too much of a risk, but got through it. Yeah, no, solid. If you guys made profit, if you guys made any profit today, congrats to you because uh I'm pretty sure a lot of people out there are not making profits. I'm pretty sure a lot of people out there are actually blowing accounts. So yeah, if you guys made profits, great. Um, but this is an ideal market for people to get wiped out because of these volatility spikes. The problem with this here too is like, say for example, you have your TP stop loss set up, and then if price ends up spiking through it and there's slippage, and trust me, there's going to be slippage today because a lot of the brokers are just not even operating. So if there's slippage and price hits your stop loss and goes through it and it spikes super far out, there goes your account. So something to keep in mind. See, we got some team profits over here. So we have Delicia. She's done trading for the day. See as it loads up. Yeah, Delicia did pretty good. So she locked in 6,805 on her first account, 6,805 on her second, 6,755 on her third, 1,235 on her fourth, 1,235 on her fifth. Sorry, guys, 1 second. Sorry, guys, the dog barking. So Delicia locked in 6,000, 6,000, 6,000, 1,000, 1,000, 1,000, 1,000, 1,000. So see, I'm gonna add it up real quick. It's just be a lot easier that way. 6, 12, 18, let's say 20, 22, 23, 24, 25, 26. About 26,000 for Delicia today. Nice work, Delicia. Nice work on trading this crazy market movement today. We got Kenneth over here. He locked in 225 on his first account, 225 on the second, 450 on the third. Small loss over here, 350 on the fourth account, 100, 950. So we locked in 1,000, 1,500. We lost a little bit right there. So about 1,000, about 2,000 for the day for Kenneth. Nice work, Kenneth. Locking in some good profits during, obviously this crazy market for the day. Let's see. Yeah, there's not really much else here to look at, guys. So if you guys have any questions, feel free to put them in the chat. Otherwise, I'm not really looking to take any entries here for myself. There's a possible CV entry that's coming up right here, it looks like, for a sell. It's kind of hard to tell because these candles are both a little small. So this could be a possible CV entry. If it closes smaller than this green candle for a sell, the trend right now is currently, it's kind of mixed. For the pivots, it's kind of mixed. The trend meter down below is red, but the divergence down below is also green. So you don't really have much of a confluence between all of the pattern, or between the confluences here, because the pivots over here are, I'd say, neutral. Trend meter is red. But I think the biggest factor here is going to be the divergence, because the divergence gives you a heads up of like what's going to happen next. Since the divergence here did turn green, I was expecting to possibly flip to the upside, which it did right here. That's one thing you guys can use too. This is something that Nick would use in the past, looking at divergence as like the as a leading indicator, because the divergence here will kind of tell you if price is going to move in that direction. So for example, right here, these started on these two candles, it started to split, and you can see how it's starting to push up from where it's currently at. Again, I don't trust the market right now, so it's not really anything that I would look at. But ideally, I would be looking for some buys. So we do have price kind of swinging up right here. And you can kind of see over here, if you look at the divergence, whenever the divergence swung to the buy side, it typically did push up even higher. Like if you see it pull below here, and then you see the correction right there, it ends up climbing up pretty nice. Again, the only problem here is that the spread is very, very wide. So tomorrow I'm going to make sure to keep an eye out on the spread, because the spread is currently it's still at 5. The good thing is that the ATR is now super low. Not super low, but it's super low to what it was compared to. So earlier this morning, the ATR was up to like 80 points. It's now at 54. So it's slowly deteriorated down. It went from 80 to 70 to 60, now to 50. Looks like it might be dropping below 50 here. We have price starting to climb back up. So what I would look for here, if you guys are still looking for some entries, is I would focus on some V1 variations and some possible CV entries. So now that price is climbing up right here. The only reason I say that is because we have a high right here now that's starting to pan out. So I would look for this to push up, retrace, and continue up higher from there. It's kind of where I would be looking. All right, so we got prices going back and forth. So now that I'm looking at it closely, let me go to our clean chart real quick. So the range is pretty much happening between this area right here now. Looking at this price, if we're looking at between price points, it looks like it's ranging between the 900 and the 800 right here. Looks like where price is pushing from. So between basically this lower high and this higher low. So let me just clean this up a little bit. This is where the current range is at right now. Not really seeing much direction here. Yeah, price is just going to keep bouncing back and forth between this area. All right. So let's see. Dre was asking, is trade weight down for anyone here? I think it was good for me. I didn't see any problems on my end. Let's see. Wolf Penguins asking recommended broker for gold. Let's see, Jason over here. Romanio's asking Griggs stuff for about a few months. When did they stop using? All right, I was just responding to some questions here in the chat. Yeah, welcome back, Romanio. Looks like Romanio's back here. He was asking about FTMO. It's been 8 months now since we've been away from FTMO. Yeah, I don't know if anybody here still uses FTMO, but I mean, they pretty much went downhill. Ever since they stopped accepting US clients, it just went downhill from there, unfortunately. I think they pretty much forced out all the US clients at this point. I don't know if anybody here is still using them. I mean, if you guys are not in the US, I guess you guys can still use them, but yeah, for the most part. All right, guys. So there's not really much going on here at 751. Price is pretty much ranging between the range here that I drew up. It's ranging between the 900 mark and the 800 mark. So between this area right here, the 900 and the 800 below, that is basically where I'm expecting price to continue to range from. The ATR has dropped quite a bit. It's down to 52 ATR. The spread is still pretty high. It's currently at 4 spread right now. So if you guys do want to trade, do not use a 15-15 TP stop loss. You will probably get stopped out just because of the spread. Yeah, I mean, there's not really too much here to work with. So if you guys have any questions, feel free to hop into the chat. Otherwise, I think we're going to wrap this up pretty soon. There's no reason to stay on here and force any trades. As you guys know, this is not a good market to trade in today. Probably one of the craziest markets I've seen since COVID. I don't think there's been another day like this since then, where the Dow's down 1,000 points. It's pretty far down. This is not a good sign to see the Dow down 1,000 points. You guys can see over here, everybody that's everyone's kind of not really freaking out, but everyone's kind of looking at it like, damn, it's crazy. See any updates here? So let's see, 2 minutes ago, it said South Korea ETF on pace for biggest daily loss since 2020. So it looks like the entire market is kind of screwed right now because of what's happening. So even over here, it says, South Korean stocks suffer their biggest loss since the global financial crisis of 2008. Trading was briefly halted for 20 minutes during midday trading. That's crazy. So they actually implemented, so in South Korea, they implemented their circuit breakers. So surprisingly enough, I mean, even South Korea is having problems right now. They implemented the circuit breakers for 20 minutes. If you guys are not familiar with circuit breakers, I mentioned earlier today, that's when they freeze the market for like a certain amount of time. pretty long time, 20 minutes. Usually it lasts like 5 minutes or 10 minutes. Over here in South Korea, they froze their market for 20 minutes because of what was happening. Yeah, I mean, I'm pretty interested to see what's going to happen next. The market here is pretty much kind of flattened out a little bit. It's starting to move, but for the most part, it's going back to like normal price movement. Let me measure these candles right here. There's still some spikes in candles here, but not as crazy as earlier. This is a possible levels entry if you guys are looking to take the levels right there. Again, I'm not really looking to take anything here, but possible levels entry right there. Came up higher. So there goes, price pushes up through. So there's a couple entries here. This here is a breakout V3 continuation. It's also a levels entry. I guess you can consider it also an MPS entry, if that's what you were looking for. About 3 entries on this one candle. So a lot of opportunities there to take. But again, price looks like it's pulling right back down into the range. So price pulled up over here. It looks like it might be a fake out. And it might pull back into the range. So 2 things here will happen. Price will either pull back into the range or it'll continue climbing from here, possibly break and retest, climb up higher. Those are the 2 things that I can see happening right here. But it is 7:55. It's getting closer to our cutoff time, or our official cutoff time, which is 8 o'clock. As you can see, the volatility here is starting to die down a little bit, which is a good sign because we do need the market here to calm down after all this crazy movement here earlier this morning. So let's see, Barack said he's still a trader on FTMO, had opened the account when he was before a resident here, so he just kept it the same way. Nice. Yeah, so if you're still using them, Barack, I mean, that's solid. I'm pretty sure they're still okay, but yeah, just not a lot of people are using them anymore. So, all right, guys, I think I'm gonna wrap this up for the day. I don't want to get any FOMO here as price starts to kind of smoothing out a little bit. It's not really a good time to trade anyways because the spread is still at 5 points. So if you guys want to trade, feel free to trade. Otherwise, I'm going to wrap this up for the day. If you guys have any questions, always feel free to reach out. You guys can reach me on Discord. That's probably the quickest way to get in touch with me. Otherwise, I will be back here tomorrow, same place, same time for the next live session. Hopefully tomorrow will be a lot smoother. Let me check the calendar for tomorrow. So we have some news pre-market. We have imports, balance of trade, exports. I mean, it's pretty normal news for Tuesday after NFP. And then at 7, we have inflation rate. We have economic optimism at 7:10. And that's pretty much it. So not a lot of news tomorrow. So if you guys see the market moving pretty crazy tomorrow again, it's not because of the news. It's because of a reaction to, what's been happening around the world. Again, right here. So here goes the pattern that I mentioned earlier. I said price is probably going to fake out right here and pull back into this area. And that's exactly what happened. So the analysis works fine. If the market stays this way, you probably want to stick to V1 variation and CB entries because you just want to catch the reversals, right? Price reverses, pushes to the upside, catch the reversal back down. If price pushes to the downside, catch a reversal back up. So there you go. If you guys want to continue trading, those are probably the 2 strategies that you want to focus on, V1 variation and CBs. Otherwise, I would just sit out of the market, come back tomorrow fresh, and just preserve your capital for a better trading day. So, all right, guys, I think that's it for the day. If you guys have any questions, feel free to reach out. Otherwise, unfortunately, there was no entries for today, no official entries. You guys did lock in some pretty good profits overall for you guys who did trade. If you guys have more profit to post up, feel free. Again, Delicia locked in about, looks like 12,000, I think I said earlier. And then Kenneth over here locked in about 2,000. So good profits for a crazy trading day like today. So, all right, guys, if you guys have any questions, reach out. Otherwise, I will see you guys back here tomorrow for the next live session.